The era of the US dollar's dominance coming to an end? It's a question that has been gaining traction as a new economic paradigm begins to take shape. Today we delve into the ambitious plan of the BRICS nations, Brazil, Russia, India, China and South Africa.
A seismic shift is underway in the world of finance as China and the BRICS nations take on the US dollar's dominance. This bold challenge could transform how trade, power, and economies interact on the global stage. Let's discover what de-dollarization means for markets, influence, and your financial future. What does reducing dollar dependence mean? Reducing dollar dependence refers to the process whereby countries and businesses limit their reliance on the US dollar in international trade, finance, and reserves. Currently, the dollar serves as the world's primary reserve currency and trade invoicing medium, facilitating about 50 to 60% of global payments. Moving away from the dollar implies adopting other currencies, such as the Chinese yuan or regional currencies, for trade settlements, investment, and reserve holdings. This shift aims to reduce vulnerabilities linked to dollar fluctuations, US sanctions, and geopolitical risks. De-dollarization involves creating alternative payment systems, increasing bilateral trade in local currencies, and promoting new financial institutions to support this transition. It reflects efforts by countries, particularly the BRICS group, to diversify economic ties and gain greater financial sovereignty. Such changes could progressively reshape the architecture of global finance and trade, impacting how economic power balances evolve worldwide.
Ever since the G7 froze Russian assets, the global financial landscape has been shifting in a way that can't be undone. That single act, done in lockstep with Europe, may have made diplomatic sense, but it sent a chilling message to the world about how the US wields its financial power. Biden made the call, but Trump didn't reverse course. In fact, his tariffs only deepened the fracture.
The dominance of the US dollar in global trade and finance. The US dollar remains the dominant global currency, accounting for roughly 57 to 60% of official foreign exchange reserves and over 50% of global trade invoicing and payments as of 2025. Its dominance is anchored by the size and stability of the US economy, the deep and liquid US financial markets, and the dollar's role as the safest asset during crises. US Treasury securities, valued at over $8.6 trillion held globally, are widely regarded as a secure store of value, reinforcing dollar demand. The dollar also benefits from extensive use in cross-border debt issuance and foreign exchange markets that see 88% of traded volumes in dollars. This currency's entrenched position supports the US's exorbitant privilege, allowing it to borrow cheaply and influence global monetary policies. However, growing trade tensions, geopolitical shifts, and emerging alternatives pose challenges to this dominance that global observers are closely monitoring. BRICS countries' motivation to reduce reliance on the dollar. BRICS nations, Brazil, Russia, India, China, and South Africa, seek to reduce reliance on the US dollar to enhance economic sovereignty and mitigate risks linked to dollar fluctuations and sanctions. The dominance of the dollar subjects these countries to external pressures such as US-imposed financial sanctions and exchange rate volatility impacting trade. Reducing dollar dependence helps lower transaction costs and exchange risks in their substantial intra-BRICS trade, which has grown significantly. Furthermore, de-dollarization aligns with broader geopolitical aims of challenging Western financial dominance and supporting multilateral cooperation. It encourages the use of local currencies in trade, investment, and reserve management, fostering financial integration among BRICS members. By diversifying currency exposure, BRICS countries aim to create a more balanced and resilient framework that better reflects their economic weight in the global system and withstands shocks from US monetary policy shifts.
One that is dominated by the Bretton Woods institutions, that is the World Bank and the IMF, and of course, capitalism really as the driving force, free market economy and all that. And so I think that what is driving this new interest is the failure of this system.
China's leading role in de-dollarization efforts. China drives de-dollarization globally with strategic financial tools and policy initiatives centered on internationalizing the Chinese yuan. It promotes yuan usage through expanding bilateral currency swap agreements, growing yuan-denominated commodity contracts, and fostering financial market infrastructure like the China International Payment System as an alternative to SWIFT. China's ambition to establish yuan as a major global currency is supported by steady reforms, launching yuan futures and bonds accessible to foreign investors, and developing digital yuan technology for cross-border payments. China actively encourages BRICS and other partners to use local currencies in trade settlements, reducing dollar reliance. Economic influence, sizable foreign reserves, and growing trade volumes give China leverage to reshape the financial system. These efforts aim to lower dependence on U.S. financial systems and sanctions, support yuan liquidity, and project economic power beyond traditional dollar hegemony, influencing the future global monetary order. Increasing intra-BRICS trade in local currencies. A key pillar of BRICS' de-dollarization strategy is to boost trade settlements in their own national currencies rather than the US dollar. This approach reduces exposure to dollar exchange rate volatility and bypasses US-controlled payment networks. Intra-BRICS trade volume has surged, creating a strong foundation for this currency shift by promoting bilateral currency swap agreements and direct currency conversion mechanisms. Countries leverage existing national currencies, such as the yuan, rupee, riel, ruble, and rand, to facilitate payments, lowering transaction costs, and strengthening economic ties. To implement this, BRICS members are developing integrated payment platforms and clearinghouses that operate independently of Western financial infrastructure. Increasing local currency trade enhances financial sovereignty by insulating economies from dollar shocks and sanctions. Over time, this strategy seeks to gradually shift a significant share of commodity, goods, and services trade away from dollar invoicing to more diversified currency uses within BRICS. New financial institutions supporting de-dollarization. The BRICS countries have established financial institutions to support their de-dollarization and economic cooperation goals. The New Development Bank, also known as NDB, headquartered in Shanghai, provides alternative funding for infrastructure and sustainable development projects, reducing reliance on Western-dominated financial bodies like the IMF and World Bank. The NDB finances projects often in local currencies, fostering financial independence. Similarly, the Contingent Reserve Arrangement, also known as CRA, acts as a mutual financial safety net among BRICS members for currency liquidity challenges, aiming to stabilize currencies without needing dollar-denominated bailouts. These institutions facilitate financial cooperation, liquidity support, and investment in member countries' development priorities while minimizing dollar exposure. By providing alternatives for trade finance, currency stabilization, and project funding, the NDB and CRA enhance the economic autonomy of BRICS and challenge the dollar-centric global financial order. The emergence of alternative payment systems. To reduce reliance on the US dollar and Western payment networks like SWIFT, China and Russia have developed their own financial messaging systems. China's cross-border interbank payment system, also known as CIPS, facilitates efficient yuan-based payments and international trade settlements, directly supporting yuan internationalization. Russia's System for Transfer of Financial Messages, also known as SPFS, launched fully in 2017, acts as a secure alternative to SWIFT, now connecting 177 financial institutions across 24 countries as of early 2025. SPFS supports financial communication in multiple formats and is integrated with other BRICS member systems to promote cross-border transactions in local currencies. Both systems increase financial sovereignty by bypassing dollar-based infrastructure and reducing exposure to sanctions. Russia and China are advancing further integration between SPFS and CIPS, adapting to global pressures and geopolitical tensions. These alternative networks represent crucial infrastructure underpinning the broader de-dollarization trend led by BRICS and allied nations.
The world is buzzing with the recent developments within the BRICS Union, as rumors swirl about their efforts to launch a new payment system that could potentially reshape the global financial landscape. There's even speculation about a common currency among BRICS nations, a bold move that could challenge the dominance of the US dollar, a currency that has ruled global trade for decades. This ambitious plan has been particularly promoted by media sources close to Russia and China.
The role of yuan internationalization and futures markets in China's plan. Central to China's de-dollarization efforts is the internationalization of the yuan, which involves expanding its use in global trade, finance, and reserves. China promotes yuan use through bilateral currency swaps, facilitating trade settlements with partners in yuan rather than dollars. Additionally, China has developed yuan-denominated futures markets, including commodities and financial instruments, on domestic exchanges accessible to foreign investors. This enables global participants to hedge risks and trade in yuan, bolstering liquidity and confidence in the currency. The launch of the digital yuan, China's central bank digital currency, enhances cross-border payments with speed and reduced costs. These initiatives deepen yuan's role beyond regional use, aiming to position it as a major global currency alternative. Yuan internationalization challenges dollar supremacy by creating a financial ecosystem supporting economic autonomy and enhancing China's influence in international monetary affairs.
But with changing geopolitical dynamics, the BRICS nations are challenging the US-led order. They seek a greater say in global affairs. The idea of a BRICS currency isn't new. These nations have been discussing ways to reduce their dependence on the dollar for years. The main objectives of these nations are to strengthen their economic independence and lower the risks brought about by changes in the value of the dollar.
Impact of de-dollarization on global commodities and oil trade. De-dollarization affects global commodities and oil markets by shifting the currency in which these commodities are priced and traded. Traditionally, most commodities, especially oil, have been priced in US dollars, creating sustained demand for the dollar worldwide. China and BRICS are promoting yuan-denominated oil contracts, with China launching domestic yuan oil futures that foreign buyers increasingly use. Russia, as a significant oil exporter, has begun trading oil and commodities with partners using yuan and local currencies rather than dollars. This shift decreases the dollar's share in global commodity invoicing, reducing demand for dollar reserves and affecting dollar liquidity. Additionally, trading in local currencies helps to circumvent US sanctions targeting dollar-based transactions.
Is BRICS succeeding in the de-dollarization move? The rising de-dollarization wave is hard to maneuver as the majority of the nations, under BRICS and ASEAN, are proposing local currencies, urging nations to pivot away from the dollar. The success of BRICS in its de-dollarization efforts can be characterized as incremental rather than transformational.
Geopolitical implications. The BRICS-led push to reduce dollar reliance signals a broad geopolitical shift from Western financial dominance toward a more multipolar economic order. This movement challenges the US's exorbitant privilege in setting global economic rules via the dollar and SWIFT-dominated systems. It empowers BRICS nations to strengthen economic independence, particularly from US sanctions imposed for geopolitical reasons. The US government views these initiatives as strategic threats, prompting it to reinforce financial sanctions, promote dollar use among allies, and invest in alternative technologies such as central bank digital currencies to maintain influence. Meanwhile, BRICS countries deepen cooperation, using finance as a geopolitical tool to foster economic integration and global South solidarity. Challenges and risks facing the BRICS de-dollarization drive. While de-dollarization offers strategic benefits, the BRICS initiative faces significant challenges and risks. One major obstacle is the deep-rooted dominance of the US dollar, supported by its liquidity, stability, and widespread acceptance in global financial markets. Alternative currencies like the yuan face issues including capital controls, regulatory restrictions, and limited convertibility. The infrastructure for local currency trade settlements and payment systems is still developing and not as extensive or trusted as established networks like SWIFT. Additionally, members' varying economic policies and geopolitical interests can hinder unified progress. Risks include market volatility, exchange rate fluctuations, and potential retaliation via sanctions from the US. Could this undermine US dollar hegemony and reshape global economy? The ongoing de-dollarization by China and BRICS poses a potential challenge to the US dollar's long-standing hegemony, but is unlikely to cause a swift collapse. Dollar dominance is deeply embedded due to the US's economic size, financial market depth, and global trust. However, sustained efforts like expanding alternative payment systems, promoting the yuan, and increasing local currency trade settlements can gradually erode dollar dominance over decades. This process could lead to a more diversified global monetary system with multiple currencies playing significant roles. It may empower emerging economies, change capital flows, and lessen the dollar's geopolitical leverage. The pace and scale depend on economic reforms, geopolitical stability, and technological advances such as CBDCs. Ultimately, this shift could reshape global economic governance, foster a multipolar financial ecosystem, and reduce vulnerabilities linked to dollar centrality. As China and BRICS reshape global finance, the future of the US dollar's dominance hangs in the balance. This transformation could redefine economic power and trade worldwide, making it crucial to watch these developments closely. Stay informed as the global economy enters a new era of change. Thanks for watching.